Look out down below. Stocks are dropping fast. The tech shares are clearly leading the pack on the way down just as they had on the way up. It has been rather aggressive in both directions and doesn't seem to be letting up anytime soon. Without resolution to the China-US trade issues and the concerns of the Fed interest rate hikes, stocks remain volatile. They bounce higher on any remote piece of good news usually put out in the afternoon, giving enough time for the algorithms to push stocks higher. Then after the market closes, we find out that the information was somehow invalid or unfounded rumors. The bear market in tech shares is on right now. But I thought that was impossible. You came here for the truth, so let me unveil that for you. Today I have so much information to cover, it's gonna make your head spin. I actually had to count the tabs I have open. There are 16. I've got a lot of information. I'm gonna bring it to you as quick and concise as I possibly can. I did a video during the day giving you the details as it was at that time. I need to bring you some more information to bring you up to speed. Let's begin by taking a look at this. Stocks fell on Monday, dragged lower by technology companies. In this article, they talk about Apple, Facebook, and so on. We're looking at the tech shares dropping, and this happens to be one of them. Shares of payment company Square dropped 10% on Monday. That's 1 month losses to 14% of this particular company. If you don't know who this is, it's run by the CEO of Twitter. All right, so this article is talking about Facebook and Apple. Once popular tech stocks like Facebook and Apple are now getting crushed. Facebook, the issue with this today, it's a different thing every week apparently, but Zuckerberg is a little too aggressive in how he manages Facebook at this time, and Apple has to cut their production on their newest phones already. These two things really led the charge today on Monday's trading session, pushing everything down. But if you were paying attention to what happened over the weekend, it was the China and US trade tensions that were really heating up. They suggested that they weren't able to get to a deal, and this caused a big problem, which spilled over into Monday's trading session. They don't talk about that in here. This is the Wall Street Journal article talking about Facebook and how Zuckerberg now has a more aggressive style, whatever that means. I mean, this company has gotten into scandal after scandal after scandal. It's been one after the other throughout 2018, and we will see some more scrutiny against this particular company. There's no doubt about that, but we saw that with Microsoft as well. And years later, they are one of the biggest corporations. So it doesn't necessarily mean that they're going to be smaller in the future, but their stock right now, it's not looking good. So if you want to read that, I will leave that in the description as always. Salesforce had its worst day since February 2016, plunging 8.7% to $121. There are also some other companies, some of these cloud stocks, if you know some of them, including Shopify and others, that have just been beaten up right now. It's not just today, it's not just this week. This is most apparent if you look at it from October up until today. What we saw throughout October was, just a period of time in which those stock buybacks weren't going to happen. So that's the reason why everything was bad. And then November was supposed to be better, but it's not looking any better right now. That's for sure. Okay, moving on to look at the S&P 500. The index is down 8% since closing at a record high in September. So you can see this here, the peak in September, it has come down ever since, 8% according to this chart out of Bloomberg, and that's the entire index, all right? But when you look at the tech shares, they have gone down over 20%. When you look at the FANG stocks in particular, I believe it's 26% plus that they are down right now. Looking at the worst performing stocks here, you can see a sea of red, whether it is General Electric down about 36%, or AMD, or Michael Kors is in here, Nvidia is in here, all down 30+%. If we forward to the worst and the best performers, you could see some of the best companies on the right hand side this year, whether it is Starbucks at 23% higher, Red Hat, TripAdvisor, McDonald's, and so so on have done very well, which is surprising because a lot of the portfolios are being rebalanced right now, something that I've been warning about, something that I've been telling you is going to happen. I've been ridiculed, but here it is. This is the Dow Jones moving below that 200-day moving average. If it stays here for a period of time, that doesn't look good because the algorithms start to trade based on that information. This is Apple also moving below its 200-day moving average. I needed to make sure that I show you this. FANG stocks right now are at levels they haven't seen since February of 2018. They have come down significantly. As I suggested to you, it was about 26% or so, and that gives us this opportunity to see how serious a drop can be even for companies as big as the FANG stocks. This is a chart, 4 of them actually, showing us at the top Facebook, Amazon, Netflix, and Google in that order, the FANG stocks, and they have all shown true weakness here at this time. Google is down just over 20%, and that's the best performer out of the group, if you can believe that or not. Facebook stock is down 40% right now from its peak. There is absolutely no way that this can be seen as normal. Yes, they are probably oversold at this point, but that doesn't mean that we can't have more selling. It looks like they are just constantly falling, and when they do increase, they drop further down. That's a bear market when you have more falls than rises, and that's what's going on today. Value and growth is being readjusted. That has happened really at the very beginning of October. No coincidence at all, but you can see what has occurred here, that more individual investors are going towards those value stocks versus the growth. They've been chasing the growth all up until 2018. That was very clear. That was the name of the game. But now today, that has changed. The bull market is in trouble. More selling to come. According to BNY Mellon, the market could take another leg down. I'm not saying that. That's what they're saying. They're looking at the technical analysis and they are able to determine that. I'm not sure if that is in fact the case, but we already have a serious drawdown in the markets. When you look at it, not just the tech shares, not just the FANG stocks, but look at it overall. It's not looking good. And this is a year in which happens to coincide with the quantitative tightening. Is it so coincidental that this is exactly what I have been warning about when I said if the central banks around the world do in fact engage in quantitative tightening or whatever policy that they call it in their country, want to start pulling back on all that money printing, on increasing their interest rates as opposed to decreasing them as they had been before, this is going to cause a direct proportional relationship with equities. And guess what has happened? Guess what has happened with real estate around the world in areas like Sydney, for example, in areas that we can see different real estate markets which had been so extremely high, and now today they've looked very, very weak in comparison to where they were. So hot, nothing could touch it, and then suddenly everything changes. This chart is proof. Buy the dip is dead. Buy the dip isn't working for the first time in 16 years, according to Morgan Stanley. Such market behavior is rare and in the past has coincided with the official bear markets, recessions, or both. Average daily SPX return if previous week's return was negative. And that has only been apparent in 2018. The last time we saw that was many, many years ago. In fact, more than a decade ago. So this shows us that we cannot sustain the current state of the market the way it is, and I have to start to really acknowledge what has happened here. This is a big change throughout 2018, but most in particular in October and beyond. If you found this video informative, please give me a thumbs up and give me a thumbs up for supporting this channel. So I do appreciate that very much. And last but not least, if you want the financial education you were not taught in school, well then, these two books have it all. You can actually flip through these books. All you gotta do is go over to Amazon. There's a link in the description of the video here. If you click on it, you'll be able to flip through the pages of these books to see if you like them. I have everything in these books, from the foundation to the asset classes, how to make money from it, and all of that. Check it out. Links are below. If you're more interested in the audiobook version, you can get that at themoneygps.com.